At Numerian Capital, we bring you the latest stock news each day. Please like and subscribe so we can bring these articles to you each day. Thank you. Today, October 24, 2023, the best mega cap stock? Here's what's ahead for Alphabet. Patient investors can win big owning Alphabet stock. Alphabet stock can deliver significant returns by 2026 based on reasonable growth assumptions. With search and YouTube's dominance intact, Alphabet enjoys strong moats amidst rising AI competition. At 25 times forward earnings, Alphabet stock still offers compelling value given its growth potential. Alphabet, Nasdaq GOOG, has endured a rocky start to 2023, but the tech titan now looks poised to rebound in my view. The botched launch of chatbot Bard disappointed many investors. However, Google seems to be emerging as an AI winner despite early stumbles. With rock-solid positions in search and video, sustainable growth lies ahead. Let's look at some of the tailwinds supporting Alphabet stock, and why this is a long-term tech stock worth holding for the long term. Google ended up benefiting more from AI than its competitors. There's no denying Alphabet rushed Bard to market, likely in response to Microsoft swooping in with mega chatbot ChatGPT. The underwhelming debut led many to prematurely forecast AI as an existential threat to Google's dominance. But those predictions ignored Alphabet's vast resources and technical capabilities. Fast forward to today, and it appears Alphabet will remain king of the internet rather than being replaced by AI. In fact, AI may even drag on competitors instead. Case in point, ChatGPT traffic has steadily declined since its viral launch, proving novelty fades fast. And Microsoft's integration of the AI bot into its Bing search barely budged its insignificant market share. Google wins here, in my opinion. Alphabet's long-term growth levers. Critically, search remains Alphabet's cash cow, delivering over 57% of total ad revenue. Despite economic uncertainty, second quarter search sales accelerated to 5% growth year-over-year. Search clearly remains integral to consumer journeys. Alphabet's AI can only enhance relevance and value. Beyond search, Alphabet boasts numerous vibrant growth levers like Google Cloud, YouTube ads, hardware, and more. Let's take YouTube. Alphabet disclosed over $40 billion in annual YouTube revenue in March 2023 across ads, subscriptions, and commerce. And Shorts, its TikTok clone, just crossed 2 billion monthly viewers after reaching 1.5 billion in 2022. YouTube's growth runway remains long. Meanwhile, revenue in the company's Google Cloud segment grew 28% year-over-year in second quarter. AI-optimized infrastructure drove uptake as over 70% of AI startups partner with Google Cloud. While consumption moderated amid economic uncertainty, this secular trend bodes well for the company's long-term prospects. Alphabet is also tightening spending as uncertainty stays sticky, but it continues investing in leading-edge AI, data centers, and moonshot bets through its other bets segment. Cash flow, fortunately, remains ample, totaling $21.8 billion in second quarter. Thus, Alphabet can very easily continue to fund growth and buybacks simultaneously. Alphabet stock still offers a compelling entry point. Analysts forecast Alphabet's revenue to double by 2032, reaching nearly $605 billion. Meanwhile, the company's earnings per share could approach $15.10 by then, up from $5.65 in 2023. Granted, distant forecasts carry increased uncertainty. But Alphabet's obvious competitive advantages in search, video, and cloud computing bode well for repeating last decade's double-digit annual growth. Factoring in today's valuation despite the macroeconomic turbulence, I believe Alphabet stock could reach $200 to $250 per share by 2026. This aligns with the fair value estimate of -$180 from Guru Focus by the end of 2025. The bottom line. In summary, while AI rocked Alphabet initially, its dominant services seem poised to endure and prosper. With solid growth and reasonable valuation, Alphabet stock remains a compelling mega-cap equity to own. Owning the Internet's two most essential services, search and video, gives Alphabet a position to outpace other tech titans over time. Its growth story remains intact, in my view. Could shares meander a while longer? Certainly. Recession fears persist, and the macro backdrop isn't as rosy as it was 2 years ago. But for long-term investors, accumulating Alphabet over time has proven to be a wise decision. Leaders will separate themselves again once conditions improve. It's time to double down on Alphabet stock ahead of Alphabet earnings. With its dominant position in AI and online search, Alphabet is a great investment. With its third quarter earnings on deck, now is a smart time to buy Alphabet stock. The company has a major long-term catalyst in artificial intelligence. The antitrust case against Alphabet shouldn't hurt the company over the long term. Google parent company Alphabet is scheduled to report third quarter financial results today, and investors may want to double down on the stock ahead of the upcoming print. Alphabet stock rose 7% immediately after the company announced better than expected earnings in late July. And a growing number of analysts are turning bullish on the company and its stock due to a combination of factors that include Alphabet's leading position in artificial intelligence, and an improving market for online advertising. As such, investors may want to load up on the stock with only a day left before the company releases its third quarter numbers. AI powerhouse. A recent report from venture capital firm Excel claims that U.S. technology giants such as Nvidia and Alphabet have seen $2.4 trillion added to their market capitalizations this year due to hype surrounding AI. As a leader in the red-hot field, Alphabet has been a clear beneficiary of the AI boom, with its stock rising 52% year-to-date. With its DeepMind AI research unit, Alphabet is widely regarded as having the most advanced theoretical and practical AI research and technology in the world. Many of the top AI scientists work at Alphabet. The company is wasting no time releasing new AI products at a fast and furious pace. Since early September, Alphabet has introduced a host of new AI technologies. These have included a new generative AI software product called Gemini that is a conversational AI platform aimed at competing directly against privately held OpenAI's ChatGPT and GPT-4 chatbots. Gemini can summarize text and generate original content based on user prompts, similar to other AI chatbots. Gemini can also write and read back emails, compose song lyrics, and write news articles. The new AI software is expected to help engineers write code. More recently, Alphabet announced that it is adding AI technology to its suite of digital assistants and smart home devices. In the future, generative AI will be integrated into the company's digital assistant software. This will enable people to give their digital assistants and connected home devices voice prompts to carry out tasks such as setting timers, making hands-free phone calls, and typing and sending text messages. At the same time, Alphabet is trying to be responsible with AI, testing a new digital watermark that could potentially identify images created using the technology. The company says the watermark is being developed by DeepMind and is aimed at countering disinformation. Other issues. If there's one negative for Alphabet stock right now, it is the landmark antitrust case brought against the company by the U.S. government that is now playing out in court. Antitrust regulators are taking Alphabet to court over the dominance of its Google search engine that has become the world's primary gateway to the Internet. The legal case represents the biggest U.S. antitrust trial since regulators took on Microsoft in the late 1990s. The trial is scheduled to run through the end of November with a ruling expected in early 2024. If it's determined that Google has broken the law, a second trial will be held to decide what measures should be taken to rein in the technology giant. While not without risk, the antitrust trial is unlikely to harm Alphabet over the long term any more than it hurt Microsoft. The trial doesn't take away from the fact that Alphabet remains an online juggernaut, generating $224 billion a year in advertising revenue tied to its search engine. Today, Alphabet controls 90% of the Internet search market. That dominant position, and online advertising revenue, continue to drive Alphabet's earnings. J.P. Morgan Chase recently put out a note saying that the online advertising market strengthened through third quarter of this year, and the bank believes that AI initiatives are improving advertiser returns. J.P. Morgan's top advertising pick is Alphabet. Beyond AI and online advertising, Alphabet stock is also getting a boost from growth in Alphabet's cloud computing unit. In second quarter of this year, Google Cloud's revenue totaled $8.03 billion compared to $7.87 billion that was forecast. The cloud computing division has reported increasing revenue ever since it turned profitable in mid-2022. The company singled out its cloud computing unit as a key revenue driver in second quarter of this year. Alphabet is also seeing growth in its other bets division that includes the Waymo self-driving car division and the Verily Life Sciences unit. Revenue in the other bets unit rose 48% year-over-year to $285 million in second quarter. Buy GOOG stock. Alphabet has a lot of momentum behind it right now. Not only is the company a leader in AI, but the online ad market is improving and revenue from cloud computing and its other ventures is also on the rise. The antitrust case against the company is a dark cloud in an otherwise sunny sky, but it is unlikely to stop Alphabet's growth trajectory. With third quarter results on deck, GOOG stock is a buy. Thanks for watching.